Hello. Good morning. Good morning. I'm about to get in a buy here if we can break above these highs. Yeah, see if we can break these highs and then try getting some longs. So right now price is moving up bullish. Price is moving up bullish. We're up 5.68%. Once we get break 49.25 over there, should be getting a candlestick open up. The new 5-minute candle is about to open up here. All right, nice 5-minute candlestick creating the bottom wick. Let's fly, Goldie. All right, I got triggered in. So you can get the continuation here. Mono pull back, fly, Goldie. Oh, okay. I'm out. I'm out. I'm out. I'm out. That was volatile. Got me out. Got me out. Oh, man. Such a good opportunity this is. Looks like it was liquidity grab on the 5. Yeah, looks like I got grabbed here on the 5. Took out the high. First loss here. First loss in a minute on stream. Oh, well, at least today was a pretty good day. And I still want to get the buys though. It's such a good day to buy. $255. Man, that was such a good day to buy. Come on, Goldie. Why? Still gonna move up. Question is, when is it gonna move up now? Yes, it's coming down here. When is it going to move up? Maybe it's gonna move up in the rebreak. If it still supports this general section here on the rebreak of those highs, probably then it's gonna move up. Yeah, you can see the grab. That was a quick grab on the 5, it seems. Right over here. You can also tell, by the way, it's coming down quite aggressively there. Oh, well, can't complain. Can't complain. Can't complain. Pretty good day. Got one of these trades which just completely went in my favor this morning, finally. Because I've been seeing people make like so much money off a single trade. I've just been waiting for it to happen. So managed to catch one bomber clot this morning too. It's all good. It's all good. Up right now, still pretty well. So I think the thing is, if it re-breaks these highs, it's probably going to fly at that point. It might have been waiting for the hourly candlestick here to close. Got like 1 minute 40 seconds for the hourly closure over there. One minute 40 seconds. I don't know if I should give it a second shot over there. Probably not. Oh, man. But I know this thing is going to break those highs and fly. Gonna break that high and fly. Skyrocket. That was just like 255. Right now we're up like 5.69, but considering like how gold has been moving, 5.69 is still quite early. This thing can obviously, like, this thing can keep pushing up. I think yesterday we saw, how much did we see? We saw yesterday, percentage wise, price came like 9.54%. There's still a lot more upside to go on gold spot. I guess there was some breakouts which already happened a little bit sooner around the sections here and here. But the longer we hold that level, the more juicy that's actually looking over there. And just got the new hourly too. Hourly creating that bottom wick. That's what I like. All right, let's see. It looks like NAS is like about a 0.48%. Not much happening on NAS. This could be that fake out on gold here on the 5. Once it starts pulling up, just getting some orders from below there. Little liquidity grab situation right over here. Potentially, if it's starting to rip up like that, especially since it's still that would still be a counter trend move right there on gold. Yeah, NAS on the daily, NAS is still moving on to the upside over here. So we rebroke previous daily highs. It got some nice clean range over here to keep moving up bullish, or US 100. Four-hour also looks pretty good. I don't believe these gold buys are over. They're not over. They're not over. This was just a pull. I think this was just an hourly. This was an hourly pullback. Maybe hourly want to pull back for XY reasons. But yeah, anyway, 4-hour on US 100 looks good. Keep moving up there towards like 26,000. Doesn't look like we got much here. Pulling back, pulling back. Yeah, nothing too appetizing. Nothing standing out. Not like yesterday. Yesterday's trade was standing out quite a lot though on US 100. That sell. It's giving the sellers here a hard time on gold spot. See, I like broke these lows, giving them a hard time here. Starting to pull back, going up against them. There's a small shotgun play actually as well, I suppose. Counter trend move, but it still played out like about 37 pips on the break. Oh wait, the sell actually gave more of a push. Sell actually gave like 30 pips right over here at the break. Yeah, that was a nasty 5-minute. See, I just took out this high right here and then started ripping down. It's a nasty 5-minute. Looks like the sellers won this battle here. Below support by 49.14. It's probably going to change up the structure again. So it's going to come down. It's going to retrace down. Switch up the structure. Create maybe some more opportunities somewhere down over here. 50 SMA holds. Yeah, 50 SMA still holding. Holding candlestick here. Got it to reflip back down. Really nice clean range. Like 300 pips down towards support here. By 48.82. Silver's up. Oh, damn. Silver's up like 9.22%. This should be the... Where are we at on silver? Alright, silver also had the big dumps. Really nice range to correct though on silver. Kind of same thing that's happening here on gold on the daily time frame. Still got lots of clean range to the upside there. So for the week up ahead, we're kind of looking for more gold long positions. Wednesday, Thursday, Friday, anticipate some potential further pullbacks to the upside. And it looks like this daily also opened up a no bottom wick. We do know there's still those tensions which are daily increasing in Iran with the US. Besides from that, we're just seeing strong central bank purchases on gold spot. That's why we're starting to see the confidence for longs has not gone anywhere. This was just a natural sort of a retracement over here that we had. Looks like gold has decided to finally come down. Kind of gave the sellers here a spook, but I think overall in the break still pushed about like 30. There's still quite a decent push. But definitely gave the sellers here a bit of a fright. The break below that support. So now that looked like a break and a retest because there were no candles which could have closed above this area right over here. Got a candle close above that zone, then you know that would be a potential reversal play if that would have happened. But you see, we still kind of respected, I guess. Break and retest of that a 50, I think it was a 50 or 8 SMA. Holding down the 5-minute candle. That's the 8 SMA actually. The 50 should be lagging quite a bit. The 50 right down over here. They also got that 8 still holding it down, like clean range to the left hand side. I guess structurally speaking, that clean range does look quite nice, because if you invert the scale and let's say you're looking for a buy like this, that would be much more appetizing, because there's a lot more room right over here for price to move. Whereas in this scenario, I mean, we can only expect that volume can carry this thing throughout this level by 49.30 and then continue to push up with volume. But yeah, that's always nice to have that little bit of structure though. Always nice. Not super necessary, but definitely nice to have. Definitely nice to have. Let's see. Got anything else here? Nothing. Take a look at the weekly candles on gold. Fat liquidity grab. Wow, that thing actually reflipped. Last time we were looking at... What? This thing reflipped in like a day? Holy. Yeah, last time we were looking at it, this candle was super bearish. Super bearish, like all the way over here. It's actually already reflipped. I can actually see... Maybe you can look at like some kind of a grab of sorts. Some kind of liquidity grab of sorts right below that level. It's got that 8 SMA as well on the weekly. Still holding price nicely. Thing is, the longs are still definitely still part of the agenda for the day. It's a matter of like when are they coming back in again. I see the 5-minute also recovering quite nicely over there. Long from here. Yeah, it's recovering quite nicely. I think it just had to have some kind of pullbacks. If you look at the hourly's now created a much healthier bottom wick over there. If it wants to continue to move up bullish, so it needs to get it beyond this wick high by 49. It's like 49.35. Let's create like some kind of a support on the 5. See if we're gonna revisit these highs. Gold futures rise 6.2% to 49.39. Yeah, any setups here on silver? Silver's kind of ranging. Getting loads of wicks building up over there on silver. Getting ready for the next move, I believe. Just accumulating a little bit. Should be seeing a breakout happen soon. But it's not moving much. You can see on silver we had one break here. And then it also came into another range. Right over here. So not moving too much. I think it's going to re-break these highs possibly here with that London Open. So I get some London Open volume to come in. And comes Goldie trying to revisit that area. Yep, re-breaking that zone again. Nice push on that re-break. I believe this is just some kind of pullbacks. Definitely still long on gold spot. But did pay out the sellers quite nicely, at least on that range fill. When it did end up breaking here. It's like about 140 pips. With a V-shaped recovery. I think it was a big dip. Would have been nice if this push happened like right here. Right here, but it was a much bigger dip. It came in quite more aggressively. Like this, and then broke the highs. Here's silver as well. Silver is getting ready for some kind of a move. Should be getting ready for a move. Silver is also trending up bullish. I was in that trade trying to pass my eval for today. I took it down from order flow and using that structure to get in. You took the sell here. I think it was pretty, like, there was no pullbacks or anything of the sort here. Well, at least on the first 5 minutes, unless you had a bigger stop loss. Ripped down quite nicely. It says just waiting. Hourly to go up. Okay. We got some Bitcoin sell-offs. Second trade of the day, secured 48 pips thanks to TetraFX concepts. Very nice. That was the entry at the break of the structure. See, like, it's quite nice because you're inside the range as well. Gold is going up today. It's going up. It's going up. See, this like price came. You're inside this kind of like range area here. Broke above the highs. TP about 48 pips. Let's go. Let's go. Impulse entry with 20 pips, a little inverted right over here. Beautiful. Volume came in right there on the right shoulder. Volume came in. Started re-breaking the highs right over here. Moved up. Early entry confirmations down here. Yeah, all in all, pretty nice analysis. Very good. Kevja killing markets as well. Goldie's moving up today, chat. Goldie's moving up. Goldie's moving up. It's just like whenever you see a pull back down, it's just getting ready for the next move up again. Silver is also just broken through quite nicely over here. Quite a lovely push on silver. Also breaking out, starting to move towards the upside. Yeah, crazy day over here. This has been my biggest day yet. This has been my biggest day yet on gold. Let's see silver here moving up. Goldie moving up. I passed my first eval today on the same exact trade you took this morning. Trying to pass now on the second one. WW. This is a brilliant time to be trading gold. I'll tell you that much. Yeah, the first trade this morning was pretty good. I couldn't get it on the first break. So I waited for that exactly like that candle to close and then get in on the continuation. I was thinking today was going to be bearish, but nope. Check the charts and gold is up 4%. I'm not even checking. Usually when I wake up, the first thing I do is look at the daily percentage on gold. I'm not even checking that anymore because I know that daily percentage is going to be high. Irregardless. So I don't check it. All I do is just wake up straight to the chart, expecting it to be up already like 2+%. That's how much volume there is. Hopefully get in earlier. Early bird gets the worm, as they say. Make sure you get in on the charts on time. Get the earlier trades. And now we're here for the London. So yeah, that's Goldie. You know, I really do think this is some kind of a volume throughout 2026 that we're gonna see. I don't think this is gonna stop anytime soon. This is gonna continue. Goldie's trying to head up here. Trying to break above 49.32. If it breaks above 49.32, we have clean range about 1,000 pips. Yep. I mean, it's crazy amount of room here to move. That's what it's doing. It's breaking above a 49.32 here. Got about 10 minutes 20 for the candlestick here to close on the 30. Still bullish. Just stick with the trend on gold. Stick with the trend. Moving up, just stick with the trend. That's the best thing that I think you can do over there. This was a sell down. I just took it because absorption play, not looking for sells, but that was good. Definitely, if you're gonna wanna have a trade with loads of confidence, you definitely gotta look for a buy for sure. Like for a overall range, maybe like tradable range up until pre-New York, roughly around that pre-New York time. As of right now, it definitely is still moving upwards. See, silver rises as dramatic 2-day slump. Silver rebounded above $83 per ounce on Tuesday, clawing back some losses after a sharp 2-day sell-off that erased as much as 40% of its value from record highs. Precious metals scaled fresh all-time highs throughout January. A structural supply deficit in silver market alongside rising investment inflows from Chinese speculators further amplified the rally. See what? The decline was accelerated by a rapid unwind of speculative positions among Chinese investors, although the same cohort could once again underpin prices if dip buying emerges. Yeah, I think right now, whenever we're gonna have like that dip that we saw on gold and on silver, it just makes it a lot more appetizing for central bank buying, right? Because we dipped quite a lot, and this is just bargain prices over here. Literally come down to like 4,400 because this was more of like a dip. This wasn't like a reversal, right? It's not a reversal. I think like a true reversal gonna look like if prices to come up like this and then create some bit of structure like this. That's what a true sort of reversal would kind of look like, correct? Then you're gonna see like prices struggling to move up because now the market structure is gonna shift towards the downside. But as far as this goes, this is just a dip. There's a quick sell-off, quick retracement, correction, you know, whatever you want to call it, and then for us to continue to move up. So quite appetizing price points there for central bank buying, and that's why we're still seeing gold spot here on the weekly time frame as well. Reflip creating that massive liquidity grab. Nice little 8 SMA holding as we continue to get like this wick fill, which is basically clean range on the daily time frame. Clean daily candlesticks. So yeah, for the rest of this week up ahead, Wednesday, Thursday, Friday, definitely expect more upside on gold. I believe that should be the case. You can see how the exuberance is really starting to kick in. We didn't even have a bottom wick being formed right over here on that daily open. It just skyrocketed straight upwards. Similar scenario that's happening on silver as well. You can see no bottom wick, candle just opened upwards. Really nice range to the upside. Quite similar price action as well. You can see like the doji, and then the sell-off right here. Sell-off 2 bearish candles and then 1 bullish candle. Quite a similar situation that we're going to be having on both fronts. Yeah, so that's what you can look out for the rest of the week up ahead. Maybe even key in those Asia session positions if that's something that you like to do. As for myself and, you know, the people in the mentorship, we're just going to be keeping it the same, not changing much. Pre-London, pre-NY if we need to. Nice little accumulation here as well. Getting ready again for a rebreak potentially of the highs by 49.42 to move bullish, to continue to move upwards. Because imagine people trying to sell this thing. It's a lot more painful if you take a sell and lose a sell than it is if you take a buy and then lose a buy. Sometimes trading is about like what is the trade that you're most comfortable to take a loss on. Would you be happy to take a loss on a counter trend in a market condition like this? I think that will make you want to revenge trade a bit more. It would force you into more revenge trades if you're going to do something of the sort. So just be careful with that. Number one thing you want to protect is your psychology above all else. Psychology is like a currency in this game. If you had a deficit in psychology, then the currency is also going to follow. So always protect psychology first, above all else. You don't want to tilt. You don't want to revenge trade. Just give your shots, take your shots, and just keep it moving. Take your shots and keep it moving. It's a very easy market environment here to get a lot of FOMO. You start feeling fear of missing out, and that is essentially what's kind of ruining it for a lot of people trying to get involved into the volume here on gold, right? FOMO sometimes can help you make back a certain loss, but it can also be that double-edged sword, which just makes it even so much more worse. And at that point, you know, yeah, you got a lot more work to do to bring it back up again. So I would say keep sticking to your risk parameters on the daily, or your daily risk parameters. amount of trades that you take per session. Just keep it all the same, because even a bullish market condition like this, that's crazy bullish, and you see loads of opportunities, that shouldn't be the driving factor behind like why you're even getting involved in the market. You know, the driving factor is you're following your rules. Now you want to consistently apply your rules in the market. That's the key thing. It's not chasing. Never chase the market. Don't chase the market. The market's not going anywhere. It's going to be here tomorrow. It's going to be here next week, next year, for the next 10 plus, 20 plus years, until you get tired of it and you want to stop trading. It's going to be there. And these conditions, they're always going to come back again, you know. Oh, they're always going to be around. So, yeah, take advantage of it when you can. And don't let it tilt you. Don't let it tilt your psychology. Because right now I want to take a buy so bad. I want to take a buy so bad by 49, 42 over there. I take a buy so bad. And it looks like almost like taking, what they say, like taking candy from a baby. Kind of like taking candy from a baby type price action. You're looking to start trading silver? Yeah, I'm just watching to see how it behaves over here. It looks like quite similar to gold. So it came back into that range to test. Came back into the range to retest the buyers over here. Came back, retest the buyers to pop back up. Hey, congrats on today's trade, by the way. What a juicer. Thank you. And that thing just kept on pushing. It just kept on moving. I don't think there was a single 1 minute candle which a retrace, and it just kept pushing up and up and up and up and up. Yeah, that was a structural point right here that we're looking at for price to break. The initial break happened a little bit too quick for me, so I had to wait for a break above the high right there with the 1 minute closure. I definitely got some people here execute on the same. I think that's quite a really nice structural point to get into if you're looking for longs. Because beyond that earlier buy, you could have gotten like a couple more trades for sure. But yeah, the pushes were quite heavy. Actually, wait, let me try and investigate this a bit. I was like right here, you see, it was just buy. In terms of like a proper entry on the 1 minute, that came quite late. Quite late on. Maybe here you could have caught something here possibly. But yeah, that distribution was clean. Perfect timing as well, like clockwork. It looks like this London, for this London today, since we had already moved so much, like there was so much exuberance, there was so much pushing that happened earlier on. It seemed like with that London, it just was due for some kind of a pullback, maybe like stronger bottom wick on the hourly. But yeah, this is starting to shape up quite nice nonetheless for some kind of a continuation. It's definitely still holding up bullish overall, more bullish than anything else. You can see with silver here, we're just getting some retests by 87. Also still holding quite nicely, getting ready for a pop-up. I got 1.5 months ago my sister-in-law to invest in ETFs of gold. Best investment of her life for someone who had money in the bank. She invested like 20% of her savings. She was worried about this deep, but she's deep in profits. Oh, nice. 1.5 months ago. Yeah, I mean that's amazing, especially even after these pullbacks like now. It would have been very nice price points to get involved for anybody who is looking for that type of position holding. Because you see now you can read the technicals. So if it was a situation where someone was interested in that sort of thing, you can tell them, you know, a situation like this is still risky, because you can see it based off your experience. You can say, you know, maybe it's better that they wait for some kind of a pullback, because they're going to be obviously buying the highs. It's better for them to even miss out on any continuations there than to end up buying the highs. Then you see something like this. This is usually when people would be getting back into the market after big dip. Like this is position size holding or long-term holding. That's kind of your train of thought. So you think quite differently than you would on a typical day or intraday trading, right? Your mindset shifts quite a lot. So you're a bit more patient. You're looking from the outer perspective. Yeah, I think it is a very nice way. Actually, a very nice approach towards market. That's what I'm planning on doing when I finally retire from markets. I'm not going to be trading LTF anymore. I'll just be teaching my kids LTF. I'll be teaching, you know, if kids want to learn a skill that can help them make like a side income. This is something I plan to teach my children at a very early age, so they can start making money at a very early age and have some side income. But I think as for myself, the older I get, I'm going to be looking at these like much longer term positions, much longer term. It gives you a lot more freedom as well, you know, and you get like a lot more patience. So you're just basically waiting for those dips. You know what the dips are going to look like at that point. And they get like a nice little buy, fat stop loss in a sense. Just like hold up to like for the rest of the year basically. And keep scaling in whenever you can. I think it's safe, especially because market like gold will just all just keep going up, right? Like gold is like almost like the stock market. It's almost like the stock market. Like stock market will most of the time always keep going up. Just the question is like where you're gonna get stuck in to your positions, correct? Where you're gonna get stuck in. But you see, the thing is, if you're gonna be trading, let's say $50 million, $100 million, you can't do it on a broker. At that point, you're gonna have to call in a hedge fund. You're gonna have a hedge fund are the only people who at that point will be able to actually facilitate your orders. They'll be able to put you in. But yeah, once you start trading like 50 million upwards, let's just say, you can't trade on a brokerage at that point. It's gonna be impossible. You gotta have to get involved with a hedge fund. Yeah, people got a lot of money to spend, you know. People got a lot of money to spend. See, yeah, we got silver here still setting up and getting ready to go. Maybe for some kind of continuation from this section right here, it's gonna set up again and then continue to move bullish. As gold is also doing the same thing, it's getting ready as well. Get ready for that continuation. Imagine putting $50 million in a broker. Crazy. I wouldn't be able to sleep at night. I'll put like in a freaking hedge fund, because they're the ones who are gonna have like the capacity. A broker will eat your money. I don't even think you can trade that on a brokerage, to be honest. I wonder if anybody's ever tried it. You'd be surprised. Rich people are also very dumb. You see, like Mayweather lost about $100 million in real estate in New York. Somewhere upwards of $100+ million in real estate scams. So what Adam Sandler did the other day as well. I told you, Chad, remember that story I told you about how to extort money from a rich person at a bar? So when the guy comes to the bar and he gives you a card, just say the card doesn't work. Decline the card. Have a couple of nice girls around over there, like right next to him. Maybe you're gonna start up a conversation, blah, blah, blah. When he starts to buy his drinks, say the card declined. Right? Now, this rich guy is gonna feel like his ego got hurt. So, you know, he's gonna run out, he's gonna go to an ATM, or he's gonna do something, come back with the money, pay even more drinks now. And then at that point, you can even lure him into like buying drinks for the girls, who basically are just there as a kind of a prop to facilitate that ego so he can spend more and more and more money, which is actually a true story. True story. I remember hearing this in a podcast once. As a guy who worked in a bar, this is the trick that he actually does to rich people. You know, the best way to get money from a rich person, make them feel broke. Make them feel broke. They're going to throw money at you. Remember the story I told you? Now, Adam Sandler the other day had his daughter in a luxury, what do you call it, store, like buying Chanel bags. And the management lady came up to Adam Sandler's daughter and was like, hey, you know, by the way you're dressed, she was wearing like baggy clothes, baggy whatever. She's like profiling her that she cannot afford to buy a Chanel bag. So Adam Sandler's daughter called up Adam Sandler. The guy came in, baggy shorts, baggy clothes, the way he usually wears. And he bought every single Chanel bag in that store in all different colors, just because the manager had told Adam Sandler's daughter that she looked like she could not afford it. So that kind of got me thinking about that story as well, and how brilliantly that actually worked. You know, so I don't know, like for me, I feel like the store manager actually got the W there, because he spent like upwards of, I think, $300,000 on Chanel bags and all of this stuff. So in the end, you know, the ego kind of like messed him up as well, because he was trying to prove a point, but his ego was hurt. But in the end, the saleswoman won. She got the money, just the same way as the bartender. The bartender in the end, he won by making the rich person feel broke. And that today is the best lesson you're ever going to learn on how to get money from a rich person. Make them feel broke. Make them feel broke because of the ego. So, man, I think at the end, man, that sales lady probably got the promotion. She sold all those handbags now for making Adam Sandler's daughter feel broke. Or Adam Sandler to feel a certain way. Yeah. The ego. The ego is what destroys a lot for people. This is setting up so nicely. I feel like it breaks like 49, 42. I see silver is on its way up right now. Looks like gold should probably start. Yep, there we go. There's a pop. There's a pop in gold. Still moving on to the upside. Also silver here. Retested this section for quite some time. Really enjoyed that. PA, creating a nice little PA, and then I also got the break right here. Nice little break on silver. Oh wow, retracement. How much did it push here? Or like 20 pips, but yeah, that retracement. I think it would have been a bit of slippage in there too, because it did kind of like pop up quite a lot. Alright, silver is moving quite nicely. Followed through quite nice. I think this could still play out, but yeah, you won't want to see like a pullback like that, ideally. I'll be very careful in these market conditions. Silver is still in distribution phase. Goldie is still within the distribution section right over here. Still getting ready to pop. Could have been the candlestick here to remove some players before it continue to move up. That's what we call a long squeeze. Look at that secondary pop right over there. Kind of moving as a bit with a bit more volatility, that is. $30-minute looks quite nicely extended. 1, 2, 3, 4, 5 bullish candlesticks in a row over there. And you can properly see the accumulation here on the 5-2. Break of structure, nice little break and retest. Order setting up, break of the highs to continue pushing upwards. Looks a lot more clean here on the 5. Hey, what's up, Daryl? Pop, pop, pop. There's a supply zone at 49.90 on the 4-hour. 49.90. I think we got clean range. To me, this just looks like clean range. Got clean candlesticks for price to keep moving up here. For the 4 hour. Because this is what that daily is trying to fill. I don't know why, like, I think you're looking more at some kind of levels. I think you're looking back here somewhere. And bringing in zones or whatever. I'm not sure what you're looking at. But yeah, this is clean. For me at least, clean traffic. Because, you know, if price is going to be moving up right now, we want to be looking at ways that we can get involved in the move up. Right? We don't want to be looking for reversals because, you know, they say you can only catch one dip. There's only ever one dip in the market, or it's like a bit more risky. Like, fine, you get away with certain things from time to time, but definitely a lot more riskier. We look at the majority of people who are going to make a lot of profitable trades today, especially on gold, are going to be going bullish. They're going to be trading bullish with the market, not against the market. But to each their own. You know, if that's how that you're trading in the chat, then you gotta, you know, stick with that. If you find that works for you, then definitely go with it. There are some people, like, obviously you see like price selling off like this, there are still sellers in the market. You can still see they are still selling. You can still get away with sell opportunities. Definitely, you can still get away with those sells. I do it myself, but as of late, I've been trying to avoid the counter trend moves as much as I possibly can, because I've seen, like, with the amount of directional bias we have on gold, better off just staying with it. You know what I mean? Maybe also get like a really nice pop. Once you get your entry and you know you're in the right direction, you get a higher probability of like a nice pop in your favor. Then it just gives you like bonus profits, like what happened this morning as well. I didn't even plan a 9.16% trade. It just happened. Just executed and price just went. Showed very little signs of struggling and just continue to push on upwards. So I always find like that, those types of scenarios, you're always going to find them more happening when you're with the trend, for sure. What news do we have today? Today we have Xauusd job openings. That's what we got. Man, like, these news events, they seem so boring to look at because the way price is moving, it doesn't even make sense to look at these things. But we have Xauusd job openings. That's going to be tentative. So that means that there's no time set yet for this event. So, you know, just be careful. That's most likely coming in during New York Open. Maybe like 8:30. Yeah, be cautious about that. That's it for the day, though. You only have USD news. We got New Zealand dollar news. And tomorrow, we got ADP. Oh, nice. We got ADP, ISM services. Obviously, this NFP week. Should be NFP week. Where's NFP? We have ADP on Wednesday. No NFP this week? US government data might be impacted by the shutdown. Oh, tentative events are subject to delay, revision, or cancellation. Oh, we're doing this again. This is what we had last year. US government shutdown. Yeah, we always had the NFP was being postponed. I think it got postponed, like, how many months was that? Like 3 months or something like that? I can't remember, but NFP just kept on getting postponed. Numbers came in late. So yeah, we might see the same thing happen here as well then. If it's tentative, you might not even be getting the right folders. Might not even get ADP tomorrow, Wednesday. NFP is not on the board, so not looking good. Or rather, looking good, I suppose, because then we don't have to worry about red folders. We can just carry on with just normal trading. You know, I think when you're gonna focus just on the chart, it's a lot more comforting to know that there's nothing that market is gonna range to anticipate. Because some days you're gonna have like ADP, you're gonna have NFP, and then market's just gonna range up until that event. And then you know it's just ranging for the news. So when we don't have news, Personally, for me, like those are the best days to trade. Like, or if you just come in early enough, because the ranges for news typically start to come in, I think, during 6 a.m. Eastern. Yeah, about like 6, that's pre-New York. You can anticipate. On really aggressive days, probably like London, from the London session is going to start ranging. But these that's normal price action. What we're seeing in 2026 here is not normal PA. It's quite different. So I would say like don't get too comfortable. Like definitely right now it's a really good time to take advantage of markets, but don't get too comfortable. Because there's a way that the market does this thing where and you will experience this as well over the years. You'll start to see like once you get really too comfortable, it slowly starts to go back to a nature of maybe a little bit more volatility. Maybe the trades are not as easily playing out anymore. That's kind of what I've noticed so far here on the day. As you can see on the trades that we're looking for breakouts from the London Open, they're kind of like pushing and pulling back, right? They're slightly like pushing and pulling back. We're even starting to see like a few counter trends start to play out. There's this very nuanced way that the market kind of like shifts its character. And if you're not careful, typically a lot of traders, they fall victim to these kind of like unnecessary losses and then realize it a little bit later on when it's too late. Have to make back their trade. So that's why I think like the best practice to do is definitely stick to like one trade a session and then just monitor the session. If it was a winning trade, awesome. If it was a losing trade, just watch and see how price reacts. You know, if you're losing a trade, there's a reason you're losing the trade, correct? There's a reason that trade was a losing trade. So, you know, just take a step back and just watch the market, see if it's playing out normally. You know, always be that warrior in the garden than the gardener in a war. Just watch it, see, be a little bit cynical, be a little skeptical. Okay, you know, if I'm going to take a loss, you know, what's changed? Is there anything that's changed? Can I make sense of this loss? Or, you know, well, then you're going to carry that over to the next session if you're going to trade another session. But you overtrade one session, you kind of have a chance to get more caught in pullbacks. As you can see, we're starting to see a little bit more liquidity grabs happening here. You can see on the 5-minute break of the highs pulling back down. You can see little mini liquidity grabs happening here and here as well. So definitely a slight shock in the water since the London session at least opened up right over here. There's a bit more of a shock in the water, whereas before that, price was a little bit more straightforward. Got pre-London buys here, and there were some other nice buy setups within this region over here. But as we approach the London Open, you can start to see a bit more of that volatility start to come back in again. Those choppy fake out moves, and those whips. That's what we call them, whips. It's a scary moment. It's scary at the moment. I am struggling to trade the conditions. Let's see. I got lucky. I got lucky today when I took the win, but based on my rules, I took a loss, but I held and it worked in my favor. But I also know that it didn't. If it didn't, it would have been burnt. Yes, people are quite afraid to trade these conditions. People are trying to catch gold moves, but they keep getting burnt right now. That's 100% because you're gonna easily lose a lot when it goes against you as well. So if you're, for example, using mental stop losses, sometimes there's this thing that we like to do where we just watch how price is gonna react on the stop loss area. So it usually would come and then flirt with that area. Sometimes you come very close and then like reverse. Or like you can even break through it slightly and then reverse. But in these conditions, if you're not good at mental stop loss or closing your positions, what will typically happen is your mental will come a no stop loss. So you'll still carry over that same mentality from a normal market condition, and as it starts to push, the loss will increase like a lot faster, and you end up losing a lot more. So you have to be very careful about this. That's kind of like trading under pressure over there, especially like for traders with like tighter stop losses. I think that's a skill set that's definitely developed with a lot more experience. How to trade under certain conditions and pressure, so you don't hold the bag. You know, like get faked out like this. Look at this. Get faked out like this. Candlestick breaks at highs. That's in 2 minutes, just pulled down like 110 pips. You know, 110 pips. That's a divide by 20. That's like about a 5.5. That's like a 5.5. That's like a 1 to 5.5 in 2 minutes. So you see, if you caught like still hoping, a lot of this like hopium that, oh, it's gonna go back in my direction. Yeah, that's typically when a lot of traders start to get bent. So all is discipline above all else. Most important thing in trading. If you don't have the discipline, eventually you're gonna get a ticket. Eventually market catches up to you. You get a ticket. But if you ask me, I prefer these conditions than normal conditions, because it's also a lot more forgiving if you have a strategy. Because usually the way I like to look at it, it's kind of like fate. The market already knew by the time before you even got into that trade whether it's going to be a profitable trade or not. So it's kind of like a fate, right? So when you take the position, it's not random. It's kind of like a fate. I always feel like. So it's either gonna be a winning or a losing trade, right? So there's nothing you could have done about it except like manage your risk. So I like it because if it's gonna be a winning trade, then it's gonna be a really good winning trade. But you see, the only thing you can control is your risk in trading. You can't control the win. So at least you can control your risk. But at least if it's a winning trade, it's gonna be a bumper clot trade. That's the thing. So I prefer definitely 100% these market conditions than normal market conditions. Even get like a small push or like this, very quick pushes like 30 pips in and out. Silver volume is starting to die out slowly. Starting to thin out a little bit more there. Goldie's setting up nicely down over here as well. But you can see the 5 minutes getting quite choppy again. Loads of wicks. Yeah, I actually created like small shotgun. There's a small little shotgun play there too. Create a nice little top wick. Counter trend move to re-break the lows. That 8 SMA, the 8 SMA still holding the candle right here. Candlestick broke below support, creating that really nice top wick. Pushes, it could push the lows of volume once it starts breaking these lows. Definitely a counter trend, like 3 minutes for a candlestick there to close. Would still be looking for buys in these conditions. See US 100. Volume has certainly been a lot calmer today so far. Calmer. I don't know about calm. What do you mean calm? Because I'm seeing a lot of liquidity grabs. I'm seeing like a lot of volatility here. Oh, do you mean like slowing down? Yeah, it's like kind of slowing down. Yeah. Oh, late. Yeah, sellers came in on that little shotgun there. It's a counter trend move though. Yeah, I mean it's definitely like slowing down more than it when it was moving during like a pre-London time, like a pre-London Asia session time. Man, like price is just skyrocketing. It was moving like quite directionally. But yeah, you're right. It's getting a bit more. It's slowing down a bit. You can even see it's like retracing back into the range over here, whereas it should have just kept moving up ideally. Also, what you'd see during a pre-session time, it's giving more of like these reversals. You can see like how it also broke above the high. Boom. Reversal confirmation play right here with a small little liquidity grab to re-break the lows to fill the range down towards like 49.08. Definitely a counter trend move, but yeah, I guess it played out over there. The 200 pip range to come down to this level. Yeah, we got that nice SMA. It had a lot of nice confluence, you know. Like that 8 SMA, as we mentioned, Shotgun entry. Got that fat liquidity grab. Clean range. I guess that's why the orders came in so aggressively as well once it started breaking the lows. Little accumulation breakout right here as well. Nice SMA crossover. The only thing that would have made it perfect was if that was a buy. If you just like, let's say, invert the scale. If this was a buy, man, that would have made it perfect. Because the daily is still bullish. You got that buy liquidity grab below here. Boom, boom, boom. Break the highs. Mop up the range on the left-hand side. Even got that inverted head and shoulders. Similar right here as well. Keep moving up bullish. Like somebody like posted a chart this morning. Similar trade setup. Yeah, yes sir. Let's go. Let's go, Goldie. Yeah, similar like this. Similar like this to that volume to come in. Is similar thing that happened like right over here. Now it's filled up the range towards that resistance mark. Boom, boom, boom. Same thing right over here. Yeah, it's a proper range fill. Coming downtown to Pound Town by 49.08. Range has been filled as a reversal play. Whereas US 100, nothing too interesting here. You see, there's nothing like, there's always going to be a section where the, oh, but that's starting to push. There's always a section where you're going to have a lot more structure to play with and a lot more data to play with. And then there's times like this here on the right hand side of US 100 where it's like you don't get any of that structure. Like price just V-shaped reversals, like quick pullbacks and something. Like you can't really find an edge when there's no structure to like play based off of. And you get times like this where you can properly read the market, probably read the chart, and then see it all come together very, very nicely. So leave a 1 in the chat if you can know the difference. Leave a 1 in the chat if you can know the difference between these two. Amen. I had moved my buy stop just above this little range. Would have been awesome for a buy move. You're only saying a few days that pop hasn't happened for you yet? Yeah, it hadn't happened yet. Finally. I'm quite tempted to like just hold one trade, you know, just to see what happens. Just to see what happens. Because, alright, so got some nice ones. Awesome, awesome, awesome. Yeah, I gotta see, like, just hold one of these. 3 trades for the day and I'm done. Nice one, nice one. 1.50. Nice management on that loss. So W 2.55. Made back the previous L over there too. Compounded the first win of the day. Awesome. Yeah, very nice, man. Slaughtering markets. If you just keep it like this and you don't overtrade, like you're gonna have an amazing year. You're gonna have an amazing year, trust me. Like the thing is, people are gonna take too many trades whenever they're trading. So just, you know, keep it like simple like this. It's gonna be a lot easier for you to win. I feel like in trading, just always look at the thing that most people are doing. Yeah, try and avoid the things that most people are doing. Try and avoid that. That's a whole thing behind also TFX concepts, right? So you could always see and like borrow a few ideas, but you always kind of want to also avoid the thing most people are doing. You know, you can borrow ideas of things which work, like clean ranges, liquidity grabs, confluences, and then like the whole thing about finding your own edge as well, just like trying to read the market for yourself. So that's why like we got TFX concepts here, because I saw these things that most people are doing. Okay, so like certain things which worked and made sense, but majority of it was garbage. Majority of it was a lot harder to if you're gonna put like in a cookie cutter and you just want trading to be this kind of cookie cutter thing, then majority of what I was seeing was just not working properly. So it's like understanding a few of the concepts, like clean ranges, awesome. We've seen this clean ranges get filled, like literally we speak about this every time. We have these opportunities come in and we see them get filled like right to the T, and we see those reactions. So that's what you want to keep in your playbook. And then get really good at reading the PA and what price action is telling you before certain moves like this, right? I feel like that's where your true edge really comes from. Once you start focusing on that and you at least have the breadcrumbs, you know, the foundation of what you should be following, it's a lot easier to get better. Because let's say if you're just looking at clean ranges, then that's where you're kind of like gravitating towards, thinking, okay, so price may fill this range, but what's going to lead up to that point to what will make that a good probability trade to fill that range? So that becomes like your breadcrumb, right? And then you get really good at reading the PA when it's happening and unfolding before you. So you're going to see like a liquidity grab, say, okay, you know, it's quite interesting. We just got a liquidity grab, but then you wait for the PA to unfold. You see like a candlestick close below support. Then you're just reading price action. You're seeing this next candlestick create like a top wick, for example. So you're approaching it quite differently than somebody who would just be looking for a strategy. Because when you're just looking for the strategy part of it, you kind of miss out a lot on the reading of the price action part of it, which should also be part of the strategy. Correct? You have to apply strategy in terms of the context of how the market is behaving and how the price action is unfolding, right? So even this morning, for example, strategy would tell me to come in sooner, but the way price was unfolding, that the only way I could get a buy in was to wait for that 1 minute to first close above the range. Like sometimes got that Ricardo strategy, you know, wait for candle close above the range, and then the next 1 minute to break the previous highs. Right? So we're just seeing how it is, like how it breaks. How does it break? That's gonna either allow you to get in like right there, or maybe you have to wait a bit more. Or even like yesterday's trade, as it was breaking, so we don't get slipped, we want to see how it's breaking. You know, is it breaking properly or is it breaking aggressively? It's all in like the PA. Even sometimes just waiting a bit longer before you get into your trades can definitely help you, depending on what strategy you trade, to have a good idea whether that's going to be a good trade still or maybe not worth it. I would like to see it also, as you were saying earlier, When you retire, let it run. Oh, let it run on the daily. Yeah, exactly. Exactly. You just let it run. You just look for the price points, like key price points which are gonna make sense to you. But yeah, that's gonna be a different type of trading for sure. I'm not sure how typically people play those long positions. If they kind of have a stop loss of some sort, because the risk reward will not be great, but the risk that you take on would be a bit more, like maybe, you know, like 5%, 10%, because now we're talking about taking like very few trades in a year. We're talking about like maybe 1 to 5 trades in a year. So that's the same thing as I usually say, like Warren Buffett says. He says if he can make 2 good decisions in a year, that's what he aims for. You know, so it's like a Warren Buffett type of trading where it's like you're not taking a lot of trades, but you're waiting for those opportunities which line up perfectly, you know. Like you can also see with the uncertainty with Donald Trump and everything, it's like you just have to be so comfortable sitting on your hands, not doing anything until the world goes to shit. If that's what you're planning on doing to buy gold. Right? Just wait for the world to go to shit and then just relook for the opportunities. And that's currently what's happening now. So that's why even at these moments when you see price on gold come down so heavily like this, down to like 4,400, people are going to definitely be looking for buys. You know, novice trader would think this is a reversal, but this is not a reversal. This is just like a pullback. This is just a pullback giving you opportunity to get back into the market. You see, like I think people like to say buy when there's fear. People like say things like that about the stock market. You should be buying when people are fearful. But it's just they don't teach you how to do that. They just tell you should be buying. And you know, that's a very double-edged sword because people use that in crypto as well. People use that same mentality in crypto, which is also a lot more dangerous because crypto in essence doesn't have any kind of value really. You know, like now crypto is broken over 80K. If you were buying when people were fearful, you know, you just don't have to go too far back. You could go back to 2022 October and see how when people are buying, when you're supposed to be, when people are fearful, you're supposed to be buying, this thing completely crashed down to like 15K, wiping a lot of people out. So you have to see that instrument for what it is as well. It's the same thing that happened with GME as well. You use that same mentality for buy when people are fearful. You see like GameStop just completely melted off, completely lost its value over here. This is one more pump that happened with the guy's name, Roaring Kitty. Roaring Kitty came back onto YouTube. He had a nice stream over there. He came back onto YouTube. He said GameStop was gonna start moving up again. I think that stream had like 500,000 live viewers. And it was crazy. So a little bit of a pump and dump situation that happened. Then he went back behind the curtains. Because this is that one guy who made like, well, he made like 20, 30 million, something like that off GameStop. He already made his money. He cashed out and he came back for another grab. Because, you know, at the end of the day, like, when you're going to be trading so much money, you're going to have an opportunity to move, in essence, like, move the market, right? Little pump and dump schemes. So he did like, you know, pump and dump, and then he left again, quiet. You gotta be very careful about the instrument that you trade. That's the thing. You know, a lot of people lost money on meme coins as well. They thought meme coins was this new revolutionary thing with NFTs. You got people like Justin Bieber spend like literally millions of dollars on freaking pictures on the internet. But obviously, someone like him would not know anything about markets, obviously. So I think financial literacy is quite important whenever you're trying to play the long game, especially when you're taking big risks and less trades. Super, super important. But you can never go wrong with something like gold. You know, gold is really nice. Someone in the chat yesterday said that they've made a synthetic gold, like a fake gold, which is quite interesting. I don't know how that would actually affect the gold market. A fake gold. Would that actually be something like appetizing to people? I mean, if it's exactly the same as gold and you can create a lot of it, technically gold should lose its value because of the oversupply in the market. But at the same time, only if it's a complete one-to-one replica, maybe then. But with these kind of synthetic golds, you're always gonna be able to tell, like, this is not the real deal. I heard it's not exactly the same, so it shouldn't affect it. Yeah, there's always some kind of a way that you're gonna tell if it's not the real deal, and then that would in essence still make gold more appetizing. Well, there's a lot of things like that which are kind of scary in the horizon as technology develops, because we also have like quantum computing. You know, what will quantum computing mean? Because that's basically a cheat code. Quantum computers can access password combinations that could previously take even freaking 1,000 years. A quantum computer will do it in like a minute. You know, it'll be able to literally get through all banking system, banking security. I think by the time we get to quantum computing, then everything's gonna change. I hope it doesn't happen in our lifetime though. How do you manage your positions in the market conditions such as the ones we are now? I just trade the same way. I take the same trades. I don't change anything. I just take the same entries. I'm very cautious about the pullbacks. That's one thing, because you don't want to mess around with pullbacks in like high volume market conditions. Those are what destroy people. So it just requires a lot more discipline on the reversals to make sure you're out on time. But you know, they're quite respectful. These market conditions have been really respectful. I think it was last year that we had to increase our stop loss though. In, I believe, what was it, March? Oops, I'm looking at the wrong thing here. Yeah, I think it was in March. In March, from March, this is March 21st. We increased our stops, but you know, looking back at it now, I don't think we even needed to increase our stops. It might have just been coming out of fear, because it's the same fear that people still feel now. You know, like using a tighter stop loss on gold. It's that same fear that people have, right? So I think in last year maybe the fear got to me, so I decided to get a bigger stop loss. I'm not sure if we needed one though, but we did increase it. But this year, like, we've been getting so much more confidence, you know, because of the volume that's been coming in since last year, 2025, that this year I just started off with a lot more confidence to just keep the stops the same and just watch the plays play out. So I think that was the difference, because last year we didn't know, because we hadn't had these market conditions like ever. Like all these previous years, they were so different from 2025. So 2025 was like us testing the water to like kind of see like what we can get away with. So that's why we increased the stop loss, right? But I think at some point we even stopped doing that. That was in October. Yeah, October. Always October. October. You see, we stopped with the biggest stops on the swing entries, and then just started doing it again normally. Because you see, we started getting more confidence again. October, November, December. You see, we started getting more confident. No more big stops. And into 2026 as well, no more big stops, and we've still been playing it. So yeah, 100%, like, journaling your trades is gonna be like the most important thing that you have to do. If you don't journal your trades, then you might as well just, like, you know, be very, very true to yourself, that you know yourself, that you're not going to tilt. If you're not going to journal your trades, then you got to really know yourself that you're not going to tilt, and that you can hold yourself accountable. Quantum computing. Five minute Quants. Did you consider increasing your TPs temporarily, milking these conditions a little more? They kind of like pushing through the levels. They're pushing through the doubles, so I'm always looking to secure at least 2% on a pre-session, right? But you've seen it. It pushes through the levels like a lot more. So about increasing TPs, how can we increase the TP when we don't know how far it's gonna go? It can go way more than that. You know, you don't even have to increase the TP. You just have to watch it. You have to watch it. You gotta execute your trade and then just watch it play out. I guess it can go a lot more than that. I think the important thing is just to get stuck in. You know, just first get stuck in and then see how it plays. Because that's typically what happens whenever you get like these bomber cloud trades as well, like really big trades. Even there was this sell that we took last week on a Friday. I was when 36th. No, 30th. 36th. 30th. Yeah, it's like right here. See price is gonna come. Because we know it's gonna get through this zone, right? You can extend it just to extend it, but you wouldn't have like, I would say always having at least a 1-to-1 RRs is pretty decent. And then if it gives extra, it gives extra. Like in this situation here, it broke the low and it just gave extra. So like, okay, I'll take it. But that's why it's we don't increase that TP, because remember, market conditions in the long term, maybe not this year, maybe next year, it's going to go back to normal. It's eventually going to go back to normal. So you kind of want to be already ready for when that transition happens. Because a lot of people find themselves like, I've seen like these stories on YouTube of guys like trading 2 years profitably, and then all of a sudden like they're seeing their stats are going down, right? And they're slowly losing confidence in their system. Because maybe for that period, you know, 2 years is a very short time for the market. For that period, there could have been like some kind of a special condition like we saw in 2025, and we might see in 2026. And then you'll see slowly that degrading of performance will naturally come over the years. That's why a lot of people are not successful in trading, because they got like very short-term oriented mindset. Everyone's trying to get rich like real quick, but they're never thinking of how is the 5-year plan going to look? How is the 10-year plan going to look as well? You know, so I always just be cautious. I think the best sample size to use for your data collection is normal market conditions. In essence, daily candlesticks. If you look at the average true range of a gold daily, on average, typically we're looking at 500 pips, like 500, 600 pips. So I think if you got the if you are learning to trade in that market condition, I feel that sometimes that can build that discipline a lot better, correct? Because people who are learning to trade in 2026, they're going to be so used to these easy trades that it might feel like they have to start again when it goes back to normal conditions. You know what I mean? Rather than just starting from normal to really good, they're starting from really good, potentially going back to normal. Because typically on gold, like a range like this, we'll always expect like what, 10, 20 pips, 10, 15, 20 pips. This range is at 120 pips right now. Two years ago, I was jumping between forex pairs. Then the friend who put me onto trading back in 2022 told me stick to gold. Since then, that's been my main game. Very nice. I said I'll invest into crypto when it was down, but now it's down and I'm fearful to get in. You're right. Yeah, I mean, you see, it's not just about crypto being down, but it's about it being down in the context of the market as well. But you see, that's how people like, that's how I meant. Yeah, exactly. Like people are gonna just buy based without the understanding of the market condition. You know, like if you look at gold, yes, it came down, but the market context is overall bullish. This was not a news event that made it lose all this value. This is just pullbacks. Context is everything. You see, context is still amazing. That's why you got a lot more buyers in here. Whereas like crypto, as it's coming down, you're thinking you're getting a good price, but it's creating liquidity. It's just creating liquidity for further downside until something changes macro fundamentally for it. Because you still can't be riding this hype that we previously had that pushed crypto up to like 126. That's old news. Crypto's been struggling. It's been slowly but surely coming down. And I don't think there's anything that's changed in the crypto space at this moment for it to skyrocket back up. So when you're buying something like this, RIP to the CD. It's like that song, RIP to the CD, can't even play my hits. It's like when people stop buying CDs, everyone started downloading music. It's like, you know, this is the situation here, RIP to the CD. Because like this is when people are buying CDs, and now people are no longer buying CDs, downloading everything. Download the music from LimeWire. Remember like we had LimeWire before torrents? RIP to the CD. Yeah, I think like crypto, just be very careful. Use it like a tool. I use crypto like a tool. It's just a tool to facilitate the exchange of value. Getting rich requires skill. It's not luck. Gold rebounds after sell-off. Gold prices regain ground after 2 sessions of heavy selling, with futures in New York rising $49.55 a troy ounce. The earliest sell-off was triggered by Trump's nomination of Kevin Warsh as the next Federal Reserve chair, a choice markets viewed as more hawkish than other contenders, alongside a rebound in the dollar. Prices had previously moved well beyond levels typically associated with pure safe haven demand, linked to geopolitical macro uncertainty. As a result, the correction appears less about uncertainty subsiding and more about excess positioning being cleared. Exactly. This is just purely a correction. Yeah, you could say, oh, Kevin Warsh, you know, Kevin Warsh, new guy, hawkish. But in reality, you know, this is things which we have not yet come towards. Like, this is all things that are happening in the future, you know. We're looking more of like what's happening at this current moment is the most important thing. We haven't even experienced Kevin Warsh's first FOMC statement. Should be happening in June. So we still have quite a lot of time before June, before Kevin Warsh gets in. So from now up until June, I don't think the market is gonna use that as an excuse for why gold should sell off. We got a lot of time. Plus, Trump put him there. You know, Trump is very dovish on the dollar. Very dovish. He said in all his interviews, he wants it to become more like the yen. Because the yen has more of a competitive advantage because they're always reducing their rates. So why would he put Kevin Warsh in there? You know? I smell a fish. I smell a rat. Like something has been played. Why would he put the most hawkish guy in the Federal Reserve as a new chair when he's clearly dovish on his policies? Doesn't make sense. Trump is the type of guy who sues. Right now, Trump is literally suing everybody. All right, he's suing Trevor Noah because Trevor Noah made a joke about him at the Grammys, about him and Nicki Minaj. This morning as well, I saw you suing somebody else. Oh, who that was? I can't remember the name. But Trump's ego is very volatile. So he would not put Kevin Walsh in there if he didn't think he could control him. Trump says, literally first headline I'm seeing on my phone, Trump says he's seeking $1 billion in damage from Harvard University. Donald Trump said, we are now seeking $1 billion in damages from Harvard University after the New York Times reported that his administration had backed off on demands of $200 million to satisfy accusations of wrongdoing by the Ivy League institution. SpaceX IPOs 1.5 trillion. Oh, this is this chart here is pre-IPO. This is December 30th, 2026. That's when SpaceX is gonna go live. It's up until the end of the year. We don't have any chart work. Imagine that thing is just gonna gap up, really nice gap to the upside. I bet you people are gonna try and like sell it in the initial phases, because the gap up will benefit more of the people who already have shares in SpaceX. But for a lot more of the public, coming in a lot later. So we'll see, like, kind of what would look like a rug pull and then a push back to the upside. Like this, for example. You see, like, this was that WorldCoin crypto. It's like a push up. So that's probably how SpaceX is gonna look. It's gonna be a push up, and then you're gonna have people selling. They're gonna sell it, and then we're gonna have the continuation, the rally. Just like we saw in WorldCoin. US 100 just had a nice little break here. It's kind of up 0.40%, not by much. Goldie seems more of like correcting. It's more of in a correction phase. Yeah, that was a main entry right up here. Break of the lows, 449.29. That's kind of like Xauusd distributing. 445 pips from that entry. You really see how that volume came in right there. Really, really nice setup. Tell you, like, this setup as a buy would have been amazing. Well, also the sell played out beautifully. And it's a good thing it's pulling back though, because if we're still going to be moving up for the day, rather like pull back now. Rather pull back now. Because it is quite a lot of work for it to move up. Because if you look at the ranges, the range here on the left hand side, this is an older range. This is from the 30th of Jan range. So it's slightly a bit of an older range. It's more of a higher time frame range. So something like the 4 hour. You see, the 4 hour is gonna take its sweet time to get up to fill that section right there. That'll take its sweet time. So it's a much older range. That's why I think it's like a good thing that gold can come down and create like a bit more recent price action like this, giving like much better opportunities to keep pushing onwards and upwards. But you see it retraces into the valley like such, and then boom, you have breadcrumbs to follow, create higher highs. Will push up, and if it comes in during a time with a lot more volume, maybe like pre New York or NY Open, we can push through those levels a lot more strong, like we did here previously during the pre-London time, because that pre-London Asia session time has that capacity to keep doing that. But this 437, like this far into the London Open, definitely volume typically would expect to naturally kind of like die out. So as it's dying out, create those opportunities again, those beautiful ranges, and then push back onwards to the upside. So very good. They're really, really good, I guess. I think the key thing with gold right now is sustainability. Like that just seems to be the kind of a keyword here, especially from what we've been witnessing of late. This is not sustainable. So I think, you know, even if it breaks into a consolidation overall, that would still be quite healthy for the market. You know, create a resistance and a support here, and then just break into an overall range. This is a huge range. This is a type of range that we can basically see ourselves up until the next FOMC statement, which might actually be the case, chat. I think this is the play on gold for the quarter. It could be the case. 1, 2, 3. Because it's in June that we have the next FOMC. So like holds here to up until June. Kevin Walsh comes in. See what his first decision is gonna be. And then gold's gonna react. Because Kevin Walsh, this hawkish guy, he's still lingering in the horizon, right? We know he's coming. He's most likely gonna be there in June, if I'm not mistaken. We know he's lingering in the horizon. And you know, smart money also plays this long game. So for smart money, like a move from here to here, for us it would like be a very big move. Like for them, they'll be seeking maybe a bit more than this, since they are the market movers. So with Kevin Walsh lingering over here, I guess like keying in positions here makes sense to be a bit more protected as we play the range up until that FOMC statement. Because now we're getting into a period of potential muddy waters with Kevin. But you can already see, interestingly enough, the easing has been put to 57.4% in June. Let's see, Kevin. Xauusd term ends in May. Yeah, February, March, April, May. Yeah, that's right before the June rate decisions. But interestingly enough, it's still at 56.6%. And with a hawkish guy coming in. But it increases quite dramatically in July, up towards like 71%. I'm gonna miss this guy. Yeah, I guess the good thing is this kind of due diligence is way above, I think, most retailers' pay grade anyway. For us, we just gotta see how the market is gonna react. You know, if we do end up seeing that exuberance come in, but even at an earlier stage, and we do find ourselves up here for XY reasons by the time June, July comes about, you know, that's okay. We're just gonna continue trading in that direction. The problem with like smart money, they kind of gotta get in like sooner, right? So their due diligence is gonna look quite different from ours. Unless you're trying to outsmart the market, then you're getting in really good price points right down here, expecting it to follow through. But we don't really need these price points, not as much as they do. So anyway, if it comes up like this, starts to re-break highs, that would still be quite possible for us to anyway take advantage in any case, because you can't move the markets. Last week we're buying so much, and now we had a lot of selling pressure, so we sell and we gotta blow with the wind. So if the wind today is blowing in the upward direction, we got to blow with the wind. We blow upwards. It's blowing downwards, we blow downwards. I wouldn't mind a little range of daily percent is up. We're buying. If it's down, we're selling. DAX looks nice today. See what platinum is doing. I haven't looked at platinum in a while. More or less the same. Yeah, it's pretty much the same. Same type of PA here. Because I got a silver, platinum, gold. Platinum, second place. I think it should still be second on the leaderboard. Platinum's up about 5% right now. Also has a really nice, lovely opportunity to skyrocket upwards. Just like silver and gold. Actually, all the PA kind of looks similar here. Also, platinum just had an intraday retracement. It's coming into like a key point, just like gold is. That resistance right here. Same with Goldie. 5 minutes about to close that resistance point. Would be expecting the next 5 minute to open up. Something like this, re-break the highs, keep pushing upwards like that. Still overall bullish on the daily. Platinum too. Like once platinum comes above this section, starts to re-break these highs to fill that range up towards that point. Nice little kiss of death on the 15 there on gold spot too. Oh, I guess we got a new 15-minute candle open too. This new 15 with that 5-minute confirmation. Hourly seems like it just did a liquidity grab. Overall, gold spot is still within this section here. Well, mainly I believe it could be waiting. I don't even think for 5 a.m. Rather look at 6 a.m. Re-break these highs, get that volume in, and then start pushing up bullish. It looks like it just did a small liquidity grab down there. Just struggling with this the hourly resistance point right here by 49.40. Just needs to get through that mark. Get through 49.40. It's a little bit easier smooth sailing for it at that point. It should be. It's the same kind of situation that we saw even happen like right here with this resistance by 48.60. How price came right towards that resistance mark and then pulled down. A little bit of profit taking happened over here. So similar situation, filled up the range. Candlestick hit it. Candlestick pulled down. It's going to attempt to break through that level if it wants to continue to move up bullish. It's going to attempt to break through that level again. And when it does, we want to see it like move through it like it did basically here. From here to here. But the range is going to be from up here to down over here. That's going to be a pretty big range. Well, a lot bigger than that one was. It's going to be like 1,000 pips. It's quite interesting actually. If we could break through that level, maybe I might take another trade today. I'm already way beyond my daily limit, but if it looks easy enough, might try and look for another position if we're above a 49.40. Because at this moment, I'm still kind of like monitoring price, and I do still see a few pullbacks happening here and there. So I'm not seeing that much decisiveness that we've been quite used to of late. Definitely noticing since the London opened, quite a little bit of a hesitation here and there. The sells seem to be playing out a lot cleaner at the moment than the buys do. The buys seem to be pulling down every time there's some kind of a confirmation, and that's what we're trying to avoid. Like two unnecessary pullbacks, because we just kind of want to have like easy stress-free trades. So I believe we're gonna start probably seeing that more likely once we break above 49.35. Right, then I think it's gonna be light work for price for the rest of the day up until New York open to fill that range. But we got to get through that level. See what silver is doing. We have to get through 49.40. Do you come back for NY session? No, I don't trade the NY session. If anything, it will be like pre-New York. So 2 hours, roughly, like 2 hours before the New York session opens. 2 hours before New York opens. That's when I'm gonna be back to see what's going on. Right now, I don't really like the way the PA looks. It doesn't look as appetizing on gold. Like, even dig onto the 1 minute time frame, there's really nothing here. That's like a V shape. Or price sold off. You see pullback here. There's like a V shape push down to the downside. Then it's like still moving up here. So still nothing too appetizing. The only amazing trade was this sell off. Actually, this is like so much confluence right here. Like when it was starting to break below those lows, so much confluence. See, like also silver is kind of like a V-shape formation right now. It's just kind of moving. You know, there's a difference between like PA, which is just kind of moving, and PA where you're gonna look at that and you're gonna get off your seat and be like, that's the one. This is the trade. This is the setup. You know, like much of like what we had this morning as well. Much of what we had this morning for the buy. Then you can see the one. I think Gbpjpy got in a bit earlier. Right over here. Where it's like you just come onto the chart and you just see it. And it's literally right there. It's right there. And all you got to do is like now wait for execution. See, in a condition like this, it's a lot more probability you're going to have a winning trade. But when you're in a condition like where price is just V-shape reversing like this, you're not going to do anything. You know, you could trade it if you want to trade it, but I feel like these are like setups maybe for different type of strategy, potentially. Yeah, that's probably it. Probably like different strategy. If you're looking for pullbacks into zones, that's probably it. But we're looking for a foundation, a house to be built. We want to see a house being built. We want to see the windows being built. We want to see the door being built. And then the roof being built. They get like a solid foundation, and then we can take it from there. Gold and silver prices surge reignite rally. Why? They're rebounding after sell-off. See, gold prices jumped early Tuesday with silver also rallying as precious metal rebounded after a sharp slump in recent days. Continuous gold futures were up 6%. Metal investors appear to have found their footing after a 2-day rout, which wiped off trillions of dollars from the gold and silver markets. The drop in prices came after President Trump nominated Kevin Warsh as the next Federal Reserve. Warsh has widely seen as the least dovish of potential candidates. It's quite funny then. Why is June currently easing at like 51%? That's when he should be in. And July is easing at 71%. So what difference does it make? Like right now, the sentiments on the Federal Reserve website is still dovish. His selection in turn sipped gold on some of its safe haven demand. See, gold's thematic drivers remain positive, and we believe investors' rationale for gold and precious allocations will not have changed. Yeah, this is the same thing I think. They're always putting that at the bottom of the article. They first say this, and then at the bottom they say, oh, but gold is still moving up though. Like, of course it's still moving up. That's just a correction. That has nothing to do with anything. I think gold was due for a correction. It's quite a healthy correction. The conditions do not appear prime for a sustained reversal in gold prices. Definitely not. Definitely not. I think that reversal only gonna come in once price starts to create some new lower lows. You know, essentially, we haven't even created any new lower low. Even if you look at the daily time frame, this is a lower low that was formed, or the higher low. Essentially, we could have taken that low out to create new lower low. But we're still creating new lower highs. It's a lower high, or we call it a higher low. It's a higher low right here. Oh, like higher low? I think so. Yeah, higher low, higher low. It's still moving up bullish. It's still moving up bullish. Unless price pushes up, boom, creates resistance, support, and then starts to break like this. Then we can talk about a reversal. Or like if it is or if it like breaks on the daily, but that's gonna take a lot longer. If it breaks on the daily and then consolidates here and then breaks back into the range, then that would look a little bit more like of a reversal. Because that's like a pullback, right? That's a sharp V-shaped pullback. It's the same thing that happened during the London Open right over here. When price broke the highs and then it had like a sharp V-shaped pullback. This is like the same PA. You see that? Like a sharp V-shaped pullback and then continues to move up in that direction. But then it came into a reversal right here where it struggled a bit more. You can see how it broke the highs now and struggle, liquidity grab, couldn't move up, and then it was more like a reversal. They sent a much bigger dump, followed through from that point, create a new lower low right over there. So leave a 1 in the chat if that made sense, because that's actually quite important. That's actually quite important to learn. It's how to differentiate between the way of differentiating between the reversal plays and just like a genuine pullback, which is going to, you know, I think it's quite important to know this. Gold prices regain. All right, no new fundamental work. Probably going to be the same headlines for the rest of the day since we don't really have much news. Only thing we have is Xauusd job opening, but that's tentative. So we might not even have that. We might not even have Xauusd job openings. We might not even have ADP on Wednesday. And NFP. See, is Trump speaking today? President Trump participates in a meeting with the President of the Republic of Colombia. President participates in signing time. Doesn't look like Trump is going to be speaking today either. Actually, kind of a calm day in a sense. Especially because Goldie is not moving anywhere as of yet. We're just kind of like holding a range. So you got like the support region right over here. And price is just kind of like holding this range that was sitting in. Yeah, it's quite chilled. That 655 pip range from this low to that high. See, US 100 is back down. Also, US 100 is ranging, created like a very big accumulation here. It's up like 0.37% though, but it's not trending. You even see on the daily bias indicator here, US 100 says it's waiting, so it's definitely not trending. Heck, it could even break and distribute from these lows. See how close it came? It didn't yet break. You see how it's flirting with these areas? Maybe potentially gonna break later. And then distribute from the accumulation it's currently sitting in. But it needs to get through like these wicks down there. I think anything could play out on US 100 at this point, since daily bias is just waiting. I think on gold I still want to see more buys. I would still like to see at least a buy today. Just got to be patient. That's the trick with trading. Man, the trick with trading is just patience. You just have to sit on your hands. Not get too overly involved. Don't get too overly involved. I promise you results are gonna already look good. As we always say. Don't get too overly involved. Want to move correct. We want to move correct. With all these sharks out there in the ocean, gotta be careful. Reading the markets. Oh, nice. Oh, okay, we've got some ones. Nice to see the ones. Nice to see the ones. Nice to see the ones. Trust me, if you're gonna understand some of these concepts, like you see, no one can take that away from you. Once it clicks, once you get that like little aha moment, once it starts to click, that's the thing that kind of like sticks with you. It sticks with you. It sticks with you, and yeah, when you start to see it, it's like a second nature. You know, when you start to see it, then it becomes like a second nature where it's you already expect that result. Like once it starts to give you the setups, the entry confirmations, you're already expecting the result. Execute with like zero hesitation. But you see, if you're still got like 1 foot in the water and you're just testing it out, you don't know, or like, then that's when the problems are gonna start coming. So that's why I said like the best strategy you're gonna ever trade is a strategy that you can easily see. That's the best strategy that you gotta trade at the moment. The one that you can easily identify. Yeah, Goldie's getting ready, chat. Get ready for this break. I reckon that break is gonna come like later, but once they start breaking 49.50, we should be able to see. At least that's what I'm expecting. I'm expecting once we start breaking that, it's probably gonna start breaking at a high volume time. I don't think it's gonna break this 5 a.m. I think most likely gonna break 6 a.m. 6 a.m. onwards. Once it starts breaking, man, it's because it's been sitting here for quite some time. It's bound to start its next distribution phase. So as you can see right now, it's definitely still in that accumulation phase. Once it starts breaking, it should start running again. You know, like when the thing about the market is when it starts to break and when it starts to pay people, it's moving in a certain direction. That's kind of what you're trying to catch. You're trying to catch that momentum. That it's running towards a certain direction. That's what you're trying to catch. You want to try and avoid being stuck in like certain areas. Especially like you can see much better here on gold like this. Ideally, you know, unless it's like that's all that the market is giving you, then you can always try your shot, but wait for those high volume times. If it doesn't start breaking by those high volume times, or if you don't see the volume start to really come back in during those high volume times, because it might be a scenario where pre-NY comes down like this, it doesn't break the high yet, but since it's a pre-NY volume and you're seeing candlesticks starting to move in a certain way, then you can already start executing like earlier. But if you don't see that movement, then yeah, best to stay away. And if you don't know how to spot that movement, then just wait for price to break above a 49.50-ish area over here. Yeah, I'll definitely give more of a probability at that point. Let's be patient. It's just moving kind of slow here. You can also stay on the 5-minute time frame. And like just gradually coming back down. Nothing much. What is this? US 100 attempting to break the highs. It's finally flipping to bullish. Okay, so it looks like US 100 is at the verge of trending. It's at the verge of trending right here. You can see that daily bias is also going to start flipping. From daily bias waiting to bullish. It's going to start flipping. You see this? US 100 is still setting up. It's still gearing up for some kind of follow-throughs. But right now it is bullish. Technically speaking, it is bullish. It's trying to get out of this. It's like a psychological resistance. That's why we have the indicator of these price points. You know, it's always like building a psychological resistance. So you're always going to see like if market is not yet moving, we'll look at the price action when it's always somewhat like this. Like it's the entry confirmation somewhat coming where we're just on the verge of having a trend, whether it's going to be bullish or bearish. You're going to see that happen quite a lot. You know, the thing with TFX concepts, it's very refined. The way we trade is a very refined approach to markets. So you're always going to see those kind of confluences always coming in at these very specific moments. So this is the basically the inception. So if we can get through this level right here, this is the first point A. If you can get through this level right here and hold its ground, essentially US 100 will be in a trending environment, and you should be seeing a lot more bullish PA coming in at that point. Well, you see, we're just in the beginning phases right now. Just in the beginning phases. So we leave nothing to chance. Like TFX concepts, the whole idea behind the way I approach markets, I try and leave nothing to chance as much as I possibly can. See, that thing can actually skyrocket upwards. So everything's accounted for. Like, we've basically seen it all. We've basically seen it all. Especially with the simulation sessions. You know, you're going to look through all those simulation sessions we've done on the WAP database. You're going to see we've basically seen majority of it all. Especially when taking notes. NAS going up now. Got it. Lol. Easy W. TFX. Beautiful. Yeah, it's just at the veg, you know. Just at the veg. Like, those are the trades that really put me on my seat, because I would prefer if that daily bias was already saying bullish. So this is like literally the inception that you're catching. It's just the beginning of the moves. Yep. Oh, you got it. Nice. Yeah, you see, I was setting up for a while. You see that little bit of exuberance, how I saw it coming in at that point. But there was nothing much really or truly happening over here. You see a bit of that exuberance, a little bit of excitement coming in towards our entry confirmations. Now that's how you know you're truly digging into the psychology of like what you want to see when you're getting your trades play out in your favor. But a lot of the time you take a trade and like consolidates on you. Not typically a good sign. It's quite a lot more risky when you're taking trades and they do that. I used to have that happen to me a lot with Fibonacci's. I would rarely get the golden zone, like just go always straight into profit. Even though if it did, it would always come back, or most of the time come back and consolidate quite a lot, and then eventually start to move up again. Goldie is trying to do like a little market fade here now as well. Look at this little range. It's about 230 pips. I think it's attempting a small market fade in there. Just took out the highs. Very nice range. Yeah, but gold spot has still not yet proven to us its direction. It's still not proven to us that. You're correct. I'm getting offline until closer to NY. Thank you, sir, for the session. Much respect. As always, thank you, John. Well, I have never waited to trade this long since Asia. It's Goldie to wake up again. Wake up and then see what happens. See what we do. TPO alerts are here. Track key market structure levels automatically with alerts on time price opportunity charts and indicators. Monitor value boundaries, POC, and single prints to react faster and trade with confidence. Oh, nice. That's what we want to hear, TradingView. No more constant chart watching. Let's see. TPO. Stay ahead of market structure. How are you going to stay ahead of market structure? I read it, but I didn't understand. Price crossed extended POC. Price crossed extended VH. Val. Poor high. Poor low. Poor poorer. Each alert what's that? Each alert fires only when the current price crosses levels of the already formed profiles, ignoring the currently forming TPO to reduce noise and avoid false signals. Oh, this is okay. I feel like this is an alert for an indicator. For this indicator back over here, I'm not sure what this is. Looks like you're learning the ABCs. A, B, C, D, E, F, G, H, I, J, K, L, M, N. Yeah, I got ABC strategy over here. So you can put your alerts on ABC strategy. Very good. Very, very good. See, that's the thing about TradingView. It will give you all the tools that you need to not be profitable. That's why you have all of these Elliott correction, you know, cycle lines, sign line. I'm still surprised there's no FEG thing here. They should provide something with FEG. They might as well just throw something in there. They're gonna give you all the tools you're gonna need here. You see, you got an S pattern as well. S pattern, everything you need just to overcomplicate your trading like this. But you see on our chart, I think like the best thing is taking pride in your chart work. We only got like two lines here, especially like on gold. On a US 100, if you know, you know. We don't have any chart work on there. But on gold spot, it's just like two lines we're looking at here. Up here and down over here. That's it. So this allows you a lot more room to actually think. If you have too much lines on your chart, if you got too much analysis on your chart, you can't think. And there's always going to be a reason why you should take a trade. Correct? So always like keep your chart work clean, take pride in your chart work. Look at maybe like three lines maximum whenever you're doing your analysis. Really don't need too much. Like 3 lines maximum. A Kraken, CMM. People see indicators as quick solutions profitability. Yes, sir. On US 100, you have a W pattern, always a win. Trump administration officially announces 12 billion US critical mineral reserve. Donald Trump is preparing to launch a strategic critical mineral stockpile backed by $12 billion in seed funding from the US Export-Import Bank. The move is aimed at countering what US policymakers describe as Chinese price manipulation of lithium, nickel, rare earths, and other critical minerals essential for electric vehicles, advanced technology, and defense systems. Pressures that have hindered American mining companies for years. I like this version of Trump over here. Every time he's doing something. How does one man manage to... It feels like he's literally everywhere. From liaising with celebrities to suing people to putting tariffs to threatening war in Greenland to just everything. This whole thing with ICE out as well. Now hashtag ICE out. Like this guy is literally just everywhere. But hey, that's a good thing I guess for market. He is literally everywhere. That reversal play on US 100. Now he's calling out. He's calling out Trevor Noah. Trevor Noah says it's terrible. Says the Grammys were terrible. The whole thing was terrible. Tell you, man, this guy's everywhere. Literally everywhere. From Epstein Island to just everything. But Trump said there's no such thing as rare earth minerals. This is what you get. Trump is that same guy who said if you want to make a rich person feel or spend a lot more money, make them feel broke. Make them feel broke. So Trump is the same kind of mentality. It's very easy to tilt. You know, you see him tilt every now and then. It's always so easy to tilt. But I think it's also something that comes with an entrepreneurial spirit as well, in a sense. Sometimes it's just always trying to prove the other guy wrong, trying to prove that you can do and say what you do and, you know, get things done. I guess that's where it also comes from. The ego plays a role. So it's always important to just stay humble. You know, as us traders, we're gonna experience that like so much more potently, because whenever you take a loss in the market, that it's that same feeling, the same feeling that why Adam Sandler spent like $300,000 in a store in LA, is the same feeling you're gonna feel, because it's like it's that same loss feeling. You know, that like loss feeling feels so much worse. So when you understand and humble yourself, you're never gonna put yourself in these dumb shit positions. Like, why would Adam Sandler prove a point by making people more rich? You know what I mean? That's the ego. Why would you give the market more of your money just to prove a point? To prove a point that, oh, you know, oh, this was meant to be a winning trade, or like, why would you do that? That's just all ego. Just let it go. Most of the time, you just need to give yourself, I would say, like 30 minutes. There's 30 minutes to cool off. Don't think about charts and look at the market for like 30 minutes. Take a step back and then come back to the market and then look at it from like a clear perspective. Again, for me, I just wait for the next session. I just wait for the next session. Is that good? I just wait for the next session, because next session comes around, mental is clear. Whatever happened in the past remains in the past, and then you keep moving. You keep moving forward, slowly but surely. But if you're going to be rushing it all the time, trade after trade after trade, just stop it. Stop it. Get some help. So like silver here is quite struggling as well. We haven't seen volume really come into the market yet. You see like gold is holding over here. Silver did have its initial push, but for the most part, still kind of like relatively holding this zone. Not really going anywhere. You can tell like it's getting a lot more slow. A lot more slow. Silver coming back into the, I mean US 100, sorry, not silver. US 100 coming back into the gulag here. As gold is still trying to set up. Small little accumulation grab there. There's a buy setup here did actually play out. Like 86 pips. 86 pips to the break of the highs right here. Was there a sell here? Maybe not as clean. It's only kind of buy setup that happened, because before that, that was just kind of like a V-shape formation here. Then it had a bit more structure come in. Boom, buy setup. Higher time frame, liquidity grab on the 5. And now it's starting to like pull back these traders, because we got like impulsive traders getting on entries right here as price starts to break the highs. Impulsive buyers coming in, so I think that's the market doing a little mopping up. Also just got a candlestick close below that support, creating a top wick. Re-breaks those lows, may see a similar situation as to what basically happened up here. Up here is the same thing. Liquidity grab above the highs, Candlestick close below that support, created the top wick, and then start re-breaking the lows and then filled up the range. You see a potential similar situation happened here. It looks the same. Liquidity grab. You also had the accumulation here, I think, more or less. Then top wick, SMA confluence, and re-break the low, try and like fill up the range. So it's definitely at a point of structure, I would say, where it does look a little slightly more appetizing for a certain scenario or a certain probability of a trade to play out. Same thing that was up here is the same thing that's down here too. So Goldie's cooking, Goldie's cooking, Goldie's cooking. It's getting a round come in soon here. You're going to see either like sellers come in, I think at the break of those lows, but it's definitely cooking up. It's at a point A. It's definitely cooking up. Let's see, US 100. All right, let's switch. US 100 to silver. Silver just having V-shaped recoveries. Nothing too interesting on silver. Let's see, GJ. GJ also just pulling down. Nothing too interesting on pound yen. Oh, wow. Futures. Oh, no, this was early on. Okay. Yeah, futures like 10 minutes behind here. I was like, damn, futures already breaking out. Let's see what else. Nvidia, nothing too interesting. You can literally just see it on one time frame. If there's anything cooking up. AUD/USD, looks like AUD/USD is coming down. How is it selling off so hard? Because the daily is up 0.87%. Looks like we had like a really fat pullback happen there. But the daily is moving up this bullish, except like further upside. I think AUD/US dollar is, or nope, not all-time highs. But it is definitely still currently moving upwards. I think it's just waiting for pre-New York NY Open for some kind of a true volume to start coming in. Because right now, 20 minutes into that 5 a.m. Eastern candle, sure, you can get some moves, but it's not the same way that we would expect it to follow through as much as we would expect follow-throughs at pre-London or NY Open. Like, even pay attention to New York Opens. You're going to see that. You're going to see that New York Open fake out. When that New York Open money starts to come in, and you start getting the daily direction. As that New York Open money starts to come in. You see like right here, didn't even have to go too far back. You see New York session open here at 8 a.m. Eastern. Boom, you get that NY session open volume starts to kick in. Then I guess the direction of the day will start to come in, like flow in a lot better. You see like right here. That was just yesterday's PA. I think the most interesting thing is to see gold. You know, right now I want to see gold tumble, because ideally if it breaks out low, it should break that low with volume, and it should actually push down because it's at point A right now. It's at point A. It's kind of still like resisting. You can see like the 1 minute here is kind of like resisting slightly. It's resisting to break those lows. Because it's like it's break those lows right there. You're gonna have a better probability that thing's gonna come down right over here. It's like resisting. It's holding. It's holding. It's like an artificial hold. The same thing that we said happened on the DXY. You see a DXY here? It's like an artificial hold. Right? Correct? There's an artificial hold right here on the DXY. Same thing here on gold spot. Needs to break these lows. Annoying thing is the candle's about to close in about 25 seconds. So it's going to create a support. It would have been so nice if it just created that top wick and then rebroke the lows, because that's typically what happens when the market has a lot of volume in. Just close and just completely start moving in that direction like that. But you see, it's like when it's low and it's kind of slow, that's typically what happened. Like this. Now you see candlestick here is closing as a support again. So it's still kind of like holding this range. Putin drives Trump nuts. What do you think about GJ? Where is GJ? Wait, did we remove GJ from the list? I thought I saw it here. Oh, here it is. GJ, you can see on the 1 minute already nothing too appetizing happening on GJ. GJ is moving up 0.19%. There's no daily trend, but it looks like it's predominantly moving up bullish though. I think this is PA from yesterday. Like GJ is on its way up right now. It's still going to fill this range. It was like 214 area over there. No break, no trade. Yeah, no break, no trade. GJ looks like it's moving up. I haven't traded GJ in a minute. GJ seems like it's having a small little break in a retest situation here. What else? What else? If it maybe re-breaks these lows, it starts coming down to retest these lows. If it breaks this wick low, it can come down to retest 2012-778 over there. Go see, gold is cooking up. It's a lot more interesting on gold. GJ, nothing too interesting there. And it's chopping up a lot. Like you can see on GJ, look at these wicks. Look at the amount of wicks that are building up here. So already there are these kind of like telltale signs. Whenever you open up a chart and look at an instrument for the, let's say for the first time or like after a while, there are these little telltale signs you're going to look at and they kind of give you like a small hint of the health. I guess you got to think of like a health bar. So you got like a pretty low health bar over here. Pretty low health bar on pound yen. You see loads of wicks, loads of choppiness right here. Because remember, like trading is a very visual thing. So the more iterations of price action that you can actually have under your belt, the much better trader that you're essentially going to be. So if you can tell the difference between this PA and this PA, perfect. You're on the right track. You're on the right track. If you can't tell the difference, then I think it just needs a bit of character development. That's all. That's all that's gonna need, as a bit of character development. This is not a bad thing. It's actually a very good thing. Character development can sometimes be looked at as a victimizing thing, but it's the market giving you what you need, not what you want. Plain traded oil. I haven't looked at oil in a while. That's what we saw, like $60 a barrel. Oil is, I guess, what's oil doing over here? Because of Donald Trump and Venezuela situation, and you know, again, with Trump having his hands literally in everything, he also got his sticky paws here on oil. You know, and what will that mean? Because Venezuela has the most oil, and if that's going to be under US control, you know, what's that going to mean for the oil market? Right now, it looks stable. Still hovering $60 a barrel. Oil has been kind of predominantly a little bit more bearish, towards the bearish side. From this section here where we're holding the summer lows. We're like summer lows on oil for quite some time here. And then eventually we did break out the summer lows and got a nice little break in a retest. You can see like oil is predominantly facing more towards the downside, right? You can actually see a little bit more of the lethargic price action. You can see how it's creating you lower lows, lower low, lower low. So it's not like speculating. One thing that I really don't do with my trading, I don't speculate. I just say the way the market is. If the market is moving down, this is clearly moving down. We're not going to speculate and now draw like a Fibonacci or something here to say why price can move up without backing that up with maybe some kind of a macro fundamental work. But just basically coming on the chart, looking at the pure technicals, definitely looks a lot more bearish. Definitely looks a lot more bearish, looks a lot more consolidatory on oil. So you got to look at that and say, is that interesting? Is that interesting for you? Because now when you start trading the LTF, you know, like you can expect more or less the same PA on the LTF. Goldie here is still trying to come down slowly but surely. We just had another closure below that support. Move scale to left, regular. Auto fit data to screen. Oh, what was that? Double click any edge to reset the layout. Oh, that's how you do it. Ah, nice. Yeah, get it like right in the middle. That double click it here. Yeah, you see oil is, gold is, it's really resisting the sell-off. You see I close again and look at the way this candlestick just freaking skyrocketed up. It didn't even break the lows. It's really resisting the break of the lows over here. I think it wants to actually continue to move up bullish. Maybe if it starts breaking above 49.29 over there. A new 30 open? Yes, sir. New 30 open. Got 30 minutes to pre-New York. By the time we get into pre-NY, that's when volume should be coming back in. That is when volume should be properly coming back in. Because there's always these phases of volume and then stop. Volume and then stop. So you gotta look at your instrument and say like, when is this phase most potent? When is the most potent time we're getting volume? That's when you want to ideally be involved. Market looks choppy today. Not as much volume as yesterday. Yeah, slightly a bit more choppy. But it was good earlier on. Market was brilliant earlier on. Like during pre-London time, Asia session time was really good. It's just now we've come into London here. It's a little bit more choppy. A little bit more choppy. You can see a little bit with the wicks here. So this is the London Open right here. Got choppiness here, here, here. It's like pushing down but without direction, right? It's like breaking key areas, but you can see we're still hovering within this like equilibrium, this kind of like section. We're not moving from this section. So it's just kind of playing the section, but not really distributing. That's why we got to be patient. We got to really, really just get super comfortable with just watching price and, you know, sometimes just not doing anything and just waiting, monitoring, seeing how that health is going to come back into the market. When it comes back into the market, that's when we get involved. But if you're not seeing any health come back in, like, why would you be involved, you know? It's like a low health here. Epstein traded oil. Do I take any forex trades or only commodities? Mainly commodities. Mainly commodities. I mean, you know, like, why wouldn't you just trade commodities? Because they've been performing quite well. They've been performing like the best. You know, everybody's talking about gold right now. I just put the US 100 chart here because we're still trading US 100. I'm not exactly sure why. I still haven't got it. Like, but yeah, I guess it moves. Yesterday we had some really nice. We had a trade like this on US 100 yesterday, which is like playing out really nicely. It was a similar thing. Remember, US 100 was kind of like ranging on the 5, and then it's like slowly started like breaking towards the lows, like slowly, and then eventually like played out. And there's this one little break over here as well, and then came back down. But yeah, I still don't get the allure of trading US. So I think people just trade. Honestly, my honest opinion, I think the people who are gonna trade NQ, US 100, whatever, these are just the people who are gonna trade fair value gaps, because that's what everybody in their community is trading. It's just US 100. So gold could literally be saying, "Hey, look at me! I'm giving free money over here. Come trade me." But people are gonna be like, "No, but you know, my community is trading NQ, so I'm gonna stick with NQ." But that's not like how. If you look at the mental model of a trader, the psychological model of what a trader is, they don't operate in that way. They don't operate in that way. You have to be able to bring like fresh new ideas to the table that are pulled away from what you think that, you know, your community thinks is best. But usually I gotta look at like, what do you think is best for you, and where are those opportunities you can leverage and make the most money on. Remember, at the end of the day, like, trading is a very lonely game. You essentially, you eat what you kill. You know, you eat what you kill. So you always want to put yourself in a position to have the best hunt. So if you're in a village and your village is struggling because people are not getting any food and you're going out for a hunt, maybe this time you're going to take a little detour. You know, instead of following the same old route where everybody is going, maybe this time you're going to take a different route. You're going to come back to the village with some food. You're going to feed the village that night, you know, because you're going to do something different. You're going to see, okay, so this is the route most people go and go. So this is the route that I'm going to go. Right? I'm going to try something different. That's a whole reason how I even initially started trading gold. Because when I was trading, my community was a GJ community. So we traded GJ. That was the best thing to trade. Gold, we would look at gold, but never really traded much, right? Until one point I was like, nah, this GJ thing is complete garbage. Can't be trading the pound yen. Especially this was during the time where Boris Johnson was having a lot of those fishery talks, and like literally every now and then, like you'd have him like speaking like every week, and that would be affecting price action on GJ. A lot of consolidation on GJ. It's a lot of what we saw in 2025 as well. There's just same characteristics. A lot of consolidation, not that much volume. And then you gotta look at something like gold. A lot of people right now making money on gold just based off the fact that it's moving. You know, sometimes we just need price to move. We don't even have to be right about the trade sometimes. We just need price to move. If price is moving, I'm making money. If price is not moving, I can't make money. I get caught in fake outs, I get caught in pullbacks. It's a lot more difficult to trade. So that's why for me, like, volume is the most important thing. That's why I kind of like steer clear away from things which I don't believe have that much volume in. So like for US 100, I think this is a pretty decent move right here. I believe this is 10 pips, or I think they call it points. Let's say like 100 points. Like 100 points. But in reality, I feel like this is more of like a 10. It's like a 10 pip move. This is similar to GJ. It's like a 10 pip move. See this range here on gold? This is about 230 pips. 230. It's still waiting. It's waiting on the directional bias to come in here. Whether it's gonna break above 29.30 and move up. You know, if we're just moving sideways, look and see. All right, so if we stop moving sideways, where are we going? Because it's just a probability. You see what the interesting part is here is this is just a probability section right here. So you've identified the point A. You've identified the region where price is moving and getting ready for a move. Now you've identified the point B, and let's say up here the point C, of where price could potentially move to the point where you're going to look at it and say gold is moving. We're starting to have a distribution. Gold is moving. It's paying people out. So that's all that this little chunk of P8 here is. So when you look at it in terms of like this perspective, trading is not that bad, correct? Because now all you got to do is take your hands. You got to sit on your hands, always wait for these opportunities to come and execute them based off their probabilities of them being either a winning trade in that section or a losing trade in that section. And then at that point, you just got to look at your psychology and say, okay, what am I going to do if it's a winning trade? What am I going to do if it's a losing trade? Am I going to revenge trade? Am I going to take a second trade? Maybe if I hit my daily profit target, am I going to take a second trade? Am I not going to take a second trade? That's when all the psychology questions come into play. But essentially, the act of trading itself is quite simple. You identify when the setup is going to be, and then you take the setup. People shoot themselves in the foot when it comes to psychology, because psychology now is very like open-ended. Correct? It's a very open-ended thing, whereas a strategy execution is a little bit more straightforward. a little bit more straightforward. So maybe a buy above 49.29 will be good, since we got like 20 minutes up until pre-New York anyway. I think the buy would be a good idea for daily continuation. A buy would be perfect, but if it breaks those lows, then let's see on the 1 minute what's happening here. On the 1 minute, actually looks a bit more of like a head and shoulders. Here you go, left shoulder, head, right shoulder. And it sounds like breaking these lows. That'll be the fakie up above here to push down. Essentially, shouldn't even break that low. It shouldn't break that low if it doesn't want to move down. If it ends up breaking the low, that could be the start of the distribution. XAUUSD is a guy she told you not to worry about. Oh yes. Oh, this is now it's starting to move again. See, slowly but surely, you're seeing the volume starting to come in as we're approaching high volume times. Slowly but surely, Nas is already starting to warm up a bit. Goldie's still deciding what to do here. See what the Owly looks like. Owly is like a doji. See, the Owly still hasn't moved. We've been sitting here. We got about like 17 minutes for the Owly closure. Still has not yet moved. It's getting ready for the next round. Round 2. Or actually, this is round 3. Fight. Because we got round 1 pre-London, round 2 London, round 3 pre-New York. Flawless victory. It's better if it moves now. Oh wow, look at that. Silver's on the move. Volume starting to kick in slowly. You can see the volume start to come back in slowly. It's better if it moves now. Because if it moves now and fills this range, then it'll be right on time for a pre-New York session buy to the upside. If it does give some buy entry confirmations. If it holds this level, it's I wouldn't want it to start breaking towards the new hourly candle open. I'd rather have it move before the new hourly candle open. Look at that silver volume starting to come in. Money starting to slowly but surely come into the market. Second day, my internet has been evil. Tomorrow it's like this. I'm going to send an angry wife into the shop to get them to fix it. Nothing grinds my gears, man, as much as poor internet connection. That's the worst thing. We're so used to being connected to the internet. Like, if it goes off for like a second, you're already gonna get like irritated. So irritated. Isn't that annoying? It's so annoying how the internet going off for a second can irritate you so much. Something that would never have been. And dude, like when we had computers back in, let's say the 2000s, it was normal to wait for shit to load, you know, and you never would get irritated because that was just a norm. It was just a norm to wait for things to load. I never once can remember ever getting irritated waiting for freaking the computer to go on or like for a game to load, you know. But nowadays we're gonna like have everything so fast. Everything needs to move so quick and so smooth. It's like if it goes off for like even 5 seconds, you get like really mad. And like arguably the conditions today do make it a lot more difficult for a lot of people to get into a field like trading. Because you want things to happen so quickly. And this is just like an old Macintosh that you have to be okay with that thing taking its time to load. You know, you gotta be okay with that loading. you're not okay with the loading, then you gotta find something else to do. You gotta find like a different field. Fantastic. I still remember when the internet connecting buzzing sounds are also like you're waiting. Yeah, if this was like 2000s, if this was a live stream and we're live streaming in the 2000s, I guess we're like pretty chilled over here. Right now, everybody's like, "Come on, I need a trade. Need a trade right now. I need to take 5 trades right now." Ricardo just took like, I think Ricardo had a lot of trades today already on stream. I think he takes a lot of trades because he's sending them here in the community. I think Ricardo, by the time we've been streaming, has taken at least 3 trades today. Not like 3 trades. He was gonna take another trade here, but it didn't break, so he decided to leave. Because if he stayed, he would have taken another trade. I need everything before I know what I want. Then I'll be happy. Yeah, also let me practice some Ricardo right now, and also just leave the screen over here before I do some dumb shit. I'm gonna leave the screen. I'm gonna go and get myself something to eat right now, and then slowly come back into the market like I don't even want to move. And then we'll see where this is going. We'll see if it breaks here, awesome. If it breaks here, awesome. But hey, I appreciate you all tuning into the stream. Thank you for the likes, man. I will see you all tomorrow. Adios. Take care. Remember, gold is moving up bullish. Breaks above the highs here by 49.30. If not 49.30, 49.49. We got a pretty clean range here on the 30-minute to keep moving up. That's going to be the order for the day as price is still moving up bullish. But I love you guys. I will see you all in the next one. Adios.